silver market is on the verge of what could be a once-in-a-generation boom. You see, commodities move differently than stocks. When they begin new trends, those trends often last several years. They lead to gains of several hundred, even 1,000%. And once these moves begin, little can stop them. Unlike stocks, which can be sidetracked by an earnings miss or a CEO unexpectedly stepping down, physical commodities trade purely on supply and demand. And when it comes to precious metals, that demand is not just coming from retail traders. The buyers are governments, central banks, and financial institutions with near limitless access to capital. And right now, silver is poised to rise by 300 to 500% over the next few years. Now, silver has been largely overlooked for decades. It has always taken a back seat to gold. But for the past several years, gold has taken a back seat to Bitcoin. Well, this puts silver on Wall Street's back burner. But while most investors have been focused on tariffs and interest rates, silver has quietly marched higher. In March of last year, silver finally broke out after 3 years of consolidation. It is up 118% and climbing. But based on history, this is just the early stage. Stepping back to a monthly chart, taking the big picture view, you'll notice that silver is breaking out of a 50-year cup with handle pattern. This is the biggest one I have ever seen. And silver, when it moves in a big way. The price soared more than 1,000% in the early 2000s. This pales in comparison to the 3,496% rally of the 70s. So why such extreme moves? Well, one word: manipulation. The silver market has been plagued with price manipulation for decades. In the 1970s, the Hunt brothers, who were two Nepo babies who inherited their daddy's oil fortune, cornered the silver market. They started buying at $2 an ounce. By 1979, they had accumulated over 100 million ounces of silver, close to a third of all the silver in the world. And the price had shot up to $25 an ounce. Their silver stockpile was worth more than $3 billion, an unfathomable figure at the time. They got so giddy, they started borrowing money to buy silver futures, adding massive leverage to their outsized position. By 1980, silver was approaching $50 an ounce. Then the regulators stepped in. COMEX introduced Silver Rule 7, designed specifically to curtail the Hunt's excessive futures buying. It placed heavy restrictions on buying on margin. They had to put up more money to hold these contracts, and their ability to cover their loans slipped. They were hit with margin calls and forced to sell. Silver plummeted from $48 an ounce to $11 an ounce in 8 short weeks. Their billions in silver morphed into more than $1 billion of debt. They were banned from trading U.S. commodity markets, forced to pay $130 million in damages, and ultimately filed for bankruptcy. In 2020, JPMorgan paid a $920 million settlement for manipulating precious metals markets. From 2008 to 2016, DOJ investigators discovered that their traders artificially moved silver prices through spoofing. The practice of placing huge buy and sell orders to create false supply-demand signals, then canceling them before execution. They also engaged in something known as tamping, causing sharp price drops during low liquidity periods like the morning open. They'd dump massive futures orders, which is paper silver, to push the price down, then buy physical silver on the cheap. Then you have bullion banks like JPM and UBS, holding large net short positions in silver futures. But today, silver prices are rising. Demand is high as central banks and foreign governments flee the dollar and accumulate physical assets like gold and silver instead of government bonds. It has become crystal clear that the United States government spending will never be reined in. And while we don't have time to fully dive into that here, the bottom line is this. This is going to lead to massive inflation going forward. Inflation devalues the currency, and nobody wants to hold U.S. bonds if the dollars they receive are losing value. Now, looking at the weekly chart of silver futures, you see that big breakout in early 2024. But the real story here is the big picture. We're going to go all the way back to the monthly chart with data back to 1970, and here you see the huge moves. The 1,000% rally in the 70s, the 1,000% rally in the 2000s, and now this 50-year cup with handle pattern we are emerging from today. Now, I discussed this in a video I posted 3 months ago. anticipating the breakout when silver was at $42 an ounce. If you took my advice, you're up over 45% since then. But if you're watching this for the first time, don't worry. My view is the same now as it was then. I believe it reasonable that we will see silver at $200 to $300 an ounce, potentially higher. But not just because of a chart pattern. The gold to silver ratio shows how many ounces of silver equal 1 ounce of gold. And historically, this ratio lives between like 60 and 80. Whenever it gets higher, above say 95 or 100, silver explodes upward to catch up. In 2020, the ratio hit 125. Silver immediately went from $12 to $30 over 6 months. Earlier this year, in April, the ratio breached 105 again, and silver once again surged to catch up. But gold is climbing too. These metals tend to move together, and the moves often become multi-100% supercycles. We also have soaring demand for gold and silver from institutions, central banks, and foreign governments. We have structural inflation ahead. We have a U.S. government with no intention of slowing spending. The debt will keep rising. The deficit will continue to widen, and eventually the system will break and fiat currencies get crushed. Gold and silver, and maybe Bitcoin, will skyrocket in value. And all of this is happening while a 50-year technical breakout is forming in silver. Now, if you want to be tactical, I like to use the daily chart to find good entries. And what you'll typically see is a 1 to 2 month rally followed by some consolidation. And it generally plays out like this. You get about this 2-month rally here. We're at about 45%. That's followed by a month and a half of consolidation. It then breaks out again and starts rising higher. And we actually just kind of broke out from a very short-term resistance level here this week. You see we got, after this run from 47 to 57, just a big, big move, it tightens up, trades sideways for 5 or 6 days, and starts going higher. But that's the stair-stepping pattern you tend to see, and it's just supply and demand playing out. You get a big boost in demand, it rises, that's a big move. Some people want to take profits, meaning they want to sell. Some people get shaken out, so it needs to consolidate, absorb that pent-up selling pressure, that's new supply. Then once it breaks out, it's free to make a new move higher. And this is actually very, very healthy. This is what you want to see. When markets go just straight up every single day, they're setting up for a crash. Now, my favorite entries look like this, where the chart forms these big shallowing patterns. Again, it's kind of that coil spring waiting to release its energy and shoot higher. And once the trade works, step back to longer-term charts for management. Now, I teach all this in much greater detail during the live mentoring sessions. I do them every Monday for members. I used to do these on YouTube Live, but I got a strike on last week's session for some reason, so those are going back to members-only Zoom sessions. If you want to join, it's just $5 for the entire year. There's a link in the description, or go to tradewithross.com, get signed up. I mean, it's $5. You got nothing to lose. But anyway, the goal here is to build a core position, add on to these breakouts or pullbacks, then ride the multi-year move into 150, 200, 250 plus silver. And despite what most people think, buying when it makes a new high usually does better than trying to buy the dips. I actually bought a little bit more this morning, along with some more gold. I try to buy every month or every other month. I should probably be buying more. I've just got a lot going on right now. In the middle of building an office building. Same reason I'm buying gold and silver. I think hard assets are going to perform well in the coming years. I got a new car coming in a couple of weeks. Plus, it's Christmas. I got 2 kids, 12 nieces and nephews, and a wife who likes handbags. So it's an expensive month in the Givens house. Now, some people prefer to just dollar cost average their way in. I think you'll do fine either way. I know I'm going to get a lot of questions about how and where to buy it. I actually did a video walking through the best ways to buy silver. It looks like this. So go to my channel, scroll back 3 months if you want to watch that. I'll also put a clickable link at the end of this video. Now, look, like anything, don't bet the farm. But having a percentage of assets in physical metals is smart. Bitcoin is hot, but it has weaknesses. If the power goes out, you don't have Bitcoin. If the internet goes down, you don't have Bitcoin. Silver and gold work anywhere, anytime, in every crisis. They've also been currency metals for thousands of years, and they remain the go-to inflation hedges. Now, if you made it this far, hit the subscribe button so these updates hit your feed. You'll never miss a video. And make sure you sign up for the Black Ops membership. Again, it's just $5. You'll have live interactive sessions with me every week for a year, along with a bunch of other bonuses.